First of all, let's start with the giant in this space, one of South Africa's most successful companies. I sound like a boxing announcer. Aspen, a significant global pharma company now, you'd have to say. It's penetrated the first division. It traditionally was in the generic environment, but has made global moves and certainly has a very attractive business also in the sort of over-the-counter nutraceuticals kind of environment, like, for example, baby formula. It's also an increasingly global company. Took big steps out into Australia. It's in Europe as well, 150 countries around the world. They've got core products which they follow into markets including South America, Russia, Japan, all sorts of things. It's associated with, because it was founded by one of South Africa's most favored investment entrepreneurial sons, you'd have to say. That's Stephen Saad. 15 years he's taken it from basically zero to a market cap of 163 billion rand. What a performance. A price to earnings ratio fairly elevated, although we'll see in a minute the share price has gone down a bit in the last 6 months, so it's made it cheaper, if you can call it that, on a price to earnings ratio of 31.54. Dividend yield pretty poor at this stage, has always been. Used to do a once a year capital distribution. I'm not sure what the status is of that, but in any event, you don't own these ones for the distributions, but they do put out a token 0.53% per annum yield. Chris, certainly Aspen, a fabulous company. Everybody loves them, and they've made a lot of moves in the last 6 months or year perhaps to internationalize the business even further. Why has the share price performed poorly though in recent months, do you think?
Couple of things, Paul. As you say, it's been everyone's darling, I think, in the sector, and a great company. We hold it on behalf of our clients, and we love the stock. But I think what's happened most recently is GlaxoSmithKline signaled it was getting rid of its holding in and that
Aspen. Holding, just for the viewers who don't remember the history, came about because at some point Glaxo put its Southern African business into Aspen in exchange for shares. And then it looked as though they would become their strategic partner, sold them a few businesses, but then latterly was selling down its stake.
Indeed, that's right. So that, I think, wasn't taken too well by the market. And secondly, it's been selling off a number of its operations in Australia, generic and ethical. So I think they've got $250 million for the sold it to an Indian company. And so that hasn't been taken particularly well by the market. But, you know, management has come out and they've given a pretty plausible reason as to why they're doing all of this, because they want to get a better focus on their core businesses.
So they've been selling things in Australia, which was a much bigger business. They've been selling parts of it that they don't think are a natural fit with their operations.
Yes, precisely.
Well, that seems like a good idea.
Exactly. I think they're streamlining the business. Not everybody seems to quite understand this. And so I think, Aspen, still, I mean, there's nothing on the horizon that we see that is problematic for this one.
Yeah. Let's put up the share chart to illustrate the point we've been making. So there you see it gets right up into the 400 plus environment. Then it takes a nasty sag back to kind of like the 350, 360. It's a little bit higher now. So I think that's what we're referring to. But in the course of 2014, they bought like 4 businesses. One was a sizable operation to make the deep vein thrombosis drugs in Europe from Merck. They also bought some bits and pieces from Glaxo. From various parties, they bought some businesses to distribute baby formula and those kinds of things in Latin America. So to be fair, I think there's a problem. And they also bought something from Germany, from Merck, and some other operating facilities in Netherlands and so on. I think there's a real problem. The market doesn't really have a good sense of how profitable all those businesses were, how long the company has the benefit of profits from and for, what the financing implications was, and whether they had to pay certain fees associated with that. So the trouble is that the results for the period ended June, which are about to be finalized and then declared, could be just about anything, and people are sort of wondering and worrying about what that level is going to be.
Absolutely. You've encapsulated it extremely well, Paul. And I think only when we get sight of those results, and hopefully they won't make the same mistake as they made a year ago when they get a little closed cabal of certain analysts and don't disseminate the information more widely. I hope they've learned a lesson from that you really must disseminate as widely as possible. And once we get that information, then I think it'll become an awful lot clearer what's actually been going on. And hopefully I think the share price will react positively.
Although we know this is a sector where valuations tend to be quite high, There is also a lot of international excitement in this space. So we know that, for example, mergers and acquisitions just about every week, companies trying to buy each other, Teva trying to buy Mylan, companies in the US trying to merge with each other, demergers, splits, you know, Novartis, Glaxo doing deals. It's a high intensity global industry. It's to be expected that these stocks will trade at high valuations because of the high rates of growth. It's just a question, I suppose, of whether or not it had gotten a little bit too high at the 400 plus mark.
No, I think you're right. And if you look at some of those international stocks that you're referring to, I mean, many of them aren't actually on such high PEs. They're actually much more reasonable than Aspen in many instances.
Okay, but to be fair, my sense of Aspen is that because they are operating with drugs that are in sort of sell-off mode, but they've got a sharp team with good management, expanding into new territories. Stephen's always working the margins, looking at things. He's got access to international capital by way of raising money in Europe at just about zero rates. So he can do quite big deals that are good earnings enhancing. In my experience, he's never done a bad deal where he buys something which turns out to be a lemon. He buys good businesses, keeps the best parts, re-engineers them very quickly, and then sells off the bits that he doesn't want. So I'm of the view anyway that one should back him, and I think it's disappointing the market hasn't been giving him more credit for these recent transactions.
Oh yeah, I agree. And I think the fall that it's taken in recent months does actually present a very, very good buying opportunity, even although it's sitting on the 31 times P. It's rarefied, but you know, when for quality like this, you know, these kind of opportunities don't come around that often.
Yeah. Good. So we're both hot on this one?
Definitely.
We own this one in our portfolio. Yes. We want to be in this one, certainly. Hot on Aspen.